Jay, let's talk a little bit about what's happening in the housing market right now. What do you see in terms of demand for mortgages, and how have lower rates that we've seen recently changed or affected things?
Yeah, I mean, it's been a great start to the spring here. We've got, I think, big demand. Things are up quite a bit. Dan mentioned on the refinance side, but also on the purchase side. And probably a more normalized market, meaning what people are asking for the property and what people are willing to pay is very tight right now. So I think we'll see a lot of transactions happening this spring, and the properties will probably turn pretty quickly as well.
So how would you compare it with what we saw, let's say, last spring?
Well, I think there was a wider gap, and so sometimes the appraiser might bring a property value back, and it wasn't quite what the homeowner was looking for. But right now, we study this every month, and kind of clients' expectations and appraisers' values are right on top of each other. So that should mean that it's a easier time, quite honestly, to buy a home. And then with interest rates ticking down, even better for buyers.
How would you describe or explain some of the weakness we've seen in numbers recently? I realize that real estate is a local market, but you've seen some pretty lousy numbers in places like California and other areas.
Yeah, well, we've seen that the West Coast is off a little. Actually, right now, the Midwest is probably seeing the greatest increase, followed by the Eastern Seaboard. So I think we just saw a big run on the West Coast in the last few years, so it's just taking a breather. But really positive news here in the Midwest, which was lagging behind for a bit. So, those things happen, but all in all, still very strong.
What about the issues that you might have in some of the SALT states, the blue states that are now seeing, at least in the higher end, people not going to be able to deduct the property taxes like they have in the past? How has that had an impact on some of those markets?
We haven't seen a lot of concern there. I think real estate has been a strong investment, and so that doesn't seem to be a big topic of discussion when we're talking to those clients.
Hey, Jay, how you doing? Good morning again.
Good, Dan.
Good to hear from you. This real early. It's like an eclipse, you and me seeing each other this early. I want you to know that.
Yeah, once every 10 years.
Yeah. Hey, Jay, I'm sure you're disappointed to hear that J.P. Morgan, they released earnings this morning, and their mortgage volume from the first quarter of 2019 was $15 billion in total volume, and that's off from $18.2 a year ago. I know Quicken Loans has a little bit of a different story. Do you think, is it this non-bank shadow banking industry that's affecting them and their mortgage production?
Well, Dan, I wish you were always interviewing me. These are great questions. Thank you.
Is that a softball? Was that?
Yeah, absolutely. Well, I mean, obviously, we're very proud of where we stand here as the nation's largest retail lender. And, this bank, non-bank thing, I know you've already touched on it, but it's really not the way to think about how lending is done in this country. It's about quality of loan. It's about the asset or balance sheet of the lender. And if you're a servicer, it's really about having the right technology to make sure you're taking care of clients, even if we do see a downturn in the marketplace. And so all the companies that are doing those things properly are supporting our economy, and we should be excited about that. And any regulation that we require to keep those who aren't doing those things properly in check is probably important. But I know you don't look at it this way, and I certainly don't look at it as bank, non-bankers. You say zebra, non-zebra.
Yep.
Hey, Jay, let's talk a little bit more about the technology, because for anybody who was watching at the very top of the show, Dan was pretty clear about the fact that this is a commodity business. Anybody can offer you a mortgage. There are lots of places that do. What did you say, over
30,000 plus at last count.
At last count.
At last count.
But you guys have somehow managed to take 6% of the market. You are now the largest mortgage originator, and you do that mostly through the internet. How does that work? What do you have to do?
Well, yeah, we've had a centralized business model for quite a few decades now, and so I think by focusing on that, we've been able to kind of get a jump start over others. But when you're dealing with a commodity, the service really becomes the key differentiator. And so we started focusing on client experience a long time ago, leveraging technology when that's required, but also making sure we've got team members, and we've got 17,000 folks mostly here in Detroit, and they're ready to take phone calls and chat and do email and talk to the clients any way that they want to communicate. And I think it's the combination of great team members and that technology that separates us. And Dan can talk about the J.D. Power Awards, but we've got double digits when it comes to origination and servicing to kind of demonstrate that combination really works.
Dan, the thing you guys have been doing for the last several years is the Rocket Mortgage application, which means you go online, you fill out the form. I did this myself without talking to you about any of it. You get a quote back in, how long is it, 15 minutes, 5 minutes?
Well, we actually can give you a full-blown approval now. When we launched on the Super Bowl a few years back, we set in as little as 8 minutes, but it was really like 2 minutes. But in all the testing, nobody believed 2 minutes.
None of the consumers would believe if
So
it came back
we
in 2
pushed
minutes.
it up to 8 minutes, but now maybe until they get used to it. But it's really true, and people say, well, is that not safe? And all? It's actually 1,000 times safer. You have a closed system of verification over digital wires or fiber or whatever you want to call it to verify income, verify assets, verify value, verify credit. When less human beings are touching paper and things in between, less fraud, more honesty, more clarity.
Less humans equals less fraud and more honesty?
Yeah, well, if it weren't for people, everything would be great. As you know, I'm just kidding.
Can I ask a question? How do you verify people's identity in the course of 2 minutes? And the reason I ask is we were actually having a conversation yesterday, even about Facebook and verifying people's accounts and all of the issues that are around that. The banking industry, the world you're in, it's a complete KYC, know your customer. By regulation to do that.
Sure.
And all these other companies say they can't do it. It's impossible.
We have a 32-point proprietary algorithm checklist. That, you can get access to a database comparing driver's licenses and voting registrations versus, where you are now and what your social media profiles, and it all happen in real time. And we're pretty advanced on that. And Rocket Loans, and Jay, you may want to say something about that, which is not Rocket Mortgage. They've actually pioneered it within our holding company and that kind of technology. And you raise a great point because it's probably the #1 sort of fear of the whole banking industry.
I'll jump in there just for a second because, as you mentioned, Dan, it's the data. So by bringing in data, particular, think about maybe bank account data, there are deposits or withdrawals that we can track and match that up with what people are telling us. And that's just one element of the things that we're able to do. So you're well past just a Social Security number or some simple questions. There's all of that rich data that's secure that we can bring in to really verify that we're talking to the right person. There's now technology called biometrics, so we can capture somebody's voice, of course, and then when they call right in, we know exactly who they are.
Really?
Yeah.
Well, you don't want somebody else
creepy.
calling and saying it's you, though.
What if I have a cold?
Well, there's a whole adjustment for the sinus. No, I don't.
Adjust by the season to cover that. No. But that's just so many layers is exactly how we protect people's identity.
But I was talking to a large credit card company executive. The scams that people put, that will go 2 years in legit business and build up their profile and build up their credit amount, and then they'll hit you big with a big.
So how do you find that?
There's, well,
Algorithms
it's a challenge,
for that too?
but it's a challenge.